no doubt, we are facing strong macroeconomic headwinds. Markets are down, currencies have weakened, and economic growth is slowing down. Nevertheless, we need to focus on what's going on in an underlying business and keep the eye on the ball to properly execute on our long-term strategy. With that in mind, this is in a nutshell what we would like you to remember from our call today at a high level. 1, we delivered strong organic growth. Said differently, we hit our numbers in local currency. 2, we generated positive, growing, and very strong cash flow in 2015, strong enough to cover our dividend. 3, our operational momentum continued with strong underlying service revenue growth. 4, our strategy, as we laid it out to you early in Q2, is working, and we have some early indications to demonstrate that. Mobile data is being monetized, cable is being built faster than ever, and subscribers are coming in with good data rates. 5, we're taking decisive steps in capital allocation, as we have seen with the sale of our DRC business. And 6, we are pretty positive on our 2016 and long-term outlook. There are 3 points I would like to make on this slide. 1, our growth momentum remains robust. We actually ended up Q4 with a bit of an uptick at 5.9% growth. The second point is that UNE, our cable and B2B business in Colombia, delivered strong contribution to the group growth and is actually underpinning this pickup in underlying service revenue growth. And the third point on this slide is actually a bit of a word of caution. In 2015, we did face very tough macroeconomic environments in Colombia, very strong FX devaluations across our main currencies as well. And this will continue for some time into 2016. Therefore, we're squarely and must squarely be focused on executing our very, very solid long-term strategy. You see that our data revenue in Latin America increased by 37%, or an additional $280 million. Note that we have actually now exceeded the $1 billion mark in terms of mobile data revenue in Latin America. But more importantly, and this is the key point here, in box 4, you see that in Latin America, our data revenue is now more than compensating for the decline in the legacy business, voice and SME. And this slide is just a reminder of why we're doing this. Current penetration levels for both broadband, fixed broadband, and pay TV in our markets are well below those of the more advanced Latin American economies. We have plenty of room to grow here, and we mean to take advantage of that. And be mindful that this is the same network upon which we can also service small offices and medium-sized businesses with B2B services. Our plan A with regards to Africa is the one we're squarely executing, and that is continuing to improve on our market position and on our financial performance. That is plan A, and will continue to be the plan that we drive in Africa. We've stated a goal of making Africa as a division operating cash flow break-even in 2016. I have no doubt we're going to meet that goal. Cynthia, our new head for the Africa division, is squarely focused on that. That's our game plan with regards to Africa, and will continue to be our game plan. And we are beginning to see improvement in our operations.
The last quarter of the year was undeniably tougher than the preceding quarters. A weaker macro environment, environmental and political factors, some aggressive competition in some key markets, all compounded by adverse currency movements. And plus we had a number of one-offs, which constrained the reported numbers. But despite that, we saw sound operational momentum. Mobile data is growing strongly, as is cable, as is B2B. Margins are improving, and we're being more disciplined on our capital allocation. Visibility on 2016 is not as clear as we'd like it, but we expect our organic service revenue to grow in mid-single digits. And by vigorously pursuing the cash flow model that Mauricio outlined, we see our adjusted EBITDA growing in mid to high single digits.